Bitcoin's markup phases are infrequent and steep by nature, and whomever comes prepared can make a literal killing. One such tool of controlled leverage can be found in Marathon Digital Holdings, and the more we explore its charts, the more high return, low risk ways we find to exploit it. As mentioned in this episode, Marathon Digital Holdings has already provided us with immensely lucrative and predictable buy signals. And no more than 3 days after the episode was published, it gave us a discretionary buy signal which would have generated a maximum profit of plus 60% in just 1 week. And as we know, Marathon Digital Holdings moves exponentially to that of the Bitcoin spot price. And since Bitcoin is strong and well, and since it now seems ready and mature for another move up, it naturally follows that we should redirect some focus onto Marathon. For anything we can do to squeeze out some more opportunities and maximize profits is of course of great interest to us. For this reason, I have spent a good amount of time at studying its charts. And since then, I have come across some valuable findings that I wish to share with you in this episode. But first, yeah, you already know what I'm gonna say. Nothing of what I say is financial advice. Nothing, for I'm not a financial advisor. And if you find this episode helpful, then please hit the like and subscribe buttons. And with that said, let's move on to the main event, the technical findings. In November last year, Bitcoin took out its key local top from the summer of 2019. This was the first significant technical breakthrough that told us that a markup might be in store. And from that point on, Marathon Digital Holdings has behaved in a technically much predictable way. Now, we've already discussed some of those patterns in the previous episode, such as the length and extent of its mini market cycle markups, as well as corrections. What we will rather focus on this time is how the stock behaves upon taking out each pivotal top. Now, historically speaking, Bitcoin's primary markups have been incredibly strong. This is something that sure wears off on Marathon. For as we can see, whenever it's taken out a previous local top, it's just flown right by it. Not once has it retested its previous tops from above as support before proceeding higher. Instead, each move has shown remarkable signs of momentum and strength, and especially since each outbreak in turn has been backed up by strong trading volumes. These little market cycles tick every technical box and do to a good extent copy each other roughly in length and extent. And we can also notice how the trading volumes gradually decrease as we move from each local top towards each new outbreak. In this sense, there are several clues that we're mature for another leg up, and once it does, I expect a good move. In this sense, I intend to buy the outbreak, as in to ladder into my already existing position. And to keep the risks low in case of a statistically highly unlikely fake out, I'll release it at any point below the previous local top. That on its own should easily render me anything from a 10-to-1 and all the way up to a 25-to-1 risk to reward spot. And as Bitcoin's markups are infrequent and relatively short-lived, any Bitcoin swing trader owes it to themselves to utilize these moves in full. And in this sense, whenever Marathon breaks above its peak at $49.38, I will be there. This can all be compared to being dealt an 11 at blackjack versus the dealer's 6, and with the remaining decks disproportionately stacked with high cards in relation to low. In those cases, you need to double down and with a big smile on your face. Sure, Marathon moves rapidly and much whenever it initiates another mini market cycle markup. But we also know it tends to correct just as aggressively. So how then do we know when to release our swing positions? For sitting through these steep markups just to see the gains get all wiped out, that's not how we do it. Well, so far the distance between each pivotal top is at around plus 100%. frankly speaking, you statistically double your investment upon each breakout. This of course is by no means science or in any way indicative of future payoffs, but it still gives us a rough ballpark of what to expect. Gradually selling into these markups after a certain point is the best way to approach these moves, whilst at the same time decreasing the risk. But neither do we want to miss out on excessive value. This on its own is why it's of prime importance to keep an eye on the spot price of Bitcoin, because Bitcoin moves marathon. The reason why I bring this up is because Bitcoin's primary markup cycles tend to end with blow-off moves, and that's certainly when marathon itself can provide some truly mouth-watering profits. We'll discuss just that in the next episode, as in the upsides and dangers of this very markup and how Bitcoin may react to them, and hence how we should expect Bitcoin to move from now on. For as strong as Bitcoin may be right now, there sure are some unpleasant clouds on the technical skies that should be treated with caution and respect.
OUS! OUS! Dungers! Dungers!
Target-wise, it is difficult to predict where the next mini-market cycle markup will land us. Historically, each local bottom to local top has propelled us by around 200% each time, and that's certainly in the cards now too. Regardless of that, I will begin to slowly scale out at around $65, mainly to secure some profits, as my position will then be at a 100% profit already. For I do not want to be stuck with all of my position in case of a flash crash. However, there is one thing that I will keep an extra close eye on, and that is this diagonal resistance line on the daily log chart. Any touch on this should come with a strong risk of a bounce back. We're talking in the early to mid 70,000s for a 70% move from the previous local bottom. And the reason why this diagonal resistance, which in turn creates a rising wedge, is so significant is because we had the exact same thing during the 2007 markup. And as much as history doesn't repeat itself, sometimes it rhymes like an echo. On a final note, when it comes to swing trading marathon, we must always keep in mind that marathon is only open during market hours, whereas Bitcoin trades 24/7. This means that our window to buy and sell is only open about 25% of the time. In this sense, we ought to be careful about taking on new positions late on Fridays, and if we do wise in taking on less risk, as we'll be stuck with it for more than 2.5 days straight. If anything happens during that time, there is absolutely nothing we can do about it.
You have no power here.
The same goes for RSI signals. I personally abstain from taking on any full RSI trades less than an hour before the markets close on any weekday. The reason for this is because I want to ensure that the next RSI closing, which comes with the highest risk since it can immediately disqualify the signal, doesn't turn on me. This of course complicates things and requires constant discretionary risk adaptation. Or to put it in English, it forces you to not just blindly follow any signal, but to adjust your position sizes depending on when they occur. The earlier during the week and the earlier during the market opening hours, the more risk you can justify, and vice versa. In this sense, whatever theoretical risk to reward we can identify needs to be discounted to cover for any off-market hour slippage. That was all for now. Thank you and goodbye.